So I come in contact with people who are in usually pretty good situations, but they always had issues with their credit. So what's some things that like people get started, or even us to like help build your credit toward? Because you told me in the past it's all based on your income, your debt to income ratio, and your credit score. So what's
Right.
something that they can do to help build their credit back up?
Well, first things first is pay all your bills on time. Don't have any late payments. People don't realize how much one late payment on their credit report affects their credit score. But one 30-day late payment can drop your score 100 points overnight. I mean,
Right.
it's crazy. So always, always, always pay your bills on time or early. The next thing that I see the most is damaging to credit reports or credit scores are credit card balances. Again, the higher the balance compared to the limit on the card, the lower your credit score is going to be. So ideally, you don't ever want the balance on a credit card to be above 30% of the total limit allowed to be charged on the card. If you keep that in mind and you don't ever let those balances go above that 30% mark, then the credit card actually helps build your credit. You pay your monthly payment on time and don't ever let that balance get too high, then it helps build your credit and your credit will actually improve because of the card. But the moment it goes over that 30% mark, it stops helping and starts hurting. So credit bureaus like to see that you have available credit that you can use, but you don't utilize all of the credit that is
Right.
available to you.
What else builds their credit? Because I know a lot of people say, well, I have a debit card or I have, little bitty things like that. But what else can they do? Rent? Does rent build their credit?
No, rent does not build your credit. Most landlords do not report to the credit bureaus. Things that build your credit are actual loans, debt, actual debt. So a credit card, an auto loan. I would absolutely stay away from all department store credit cards. Credit bureaus do not like department store cards. They feel that it shows impulsive behavior with your credit because you're in
Uh-huh.
line, you're waiting in line. They say, hey, I'll give you 10% off if you open up this credit
Yeah.
card today. And you say, okay, let's do it. And you're not even thinking about the fact that the credit card has a 29% interest rate on the back end that's going to cost you way more money. You're just looking at immediate savings. So credit bureaus don't like department store cards, so I would stay away from those completely. But any type of loan that you
Okay.
get through your bank or a bank credit card or anything like that will definitely help start building your credit.
So anything that you have to pay monthly,
That's
kind
right.
of like a credit. And what about medical bills? I get asked that question all the time because they say, well, I have a lot of medical bills I lost my job or, there's always why they haven't been paying them. And then student debt. How does that
Mm-hmm.
affect people's credit?
So if people have medical collections on their credit report, we are not required to hold that balance against them. However, you have to remember that medical collections still hurt your credit score pretty drastically.
Hmm.
So you still don't want to have those, even though we don't have to count it in your debt to income ratios. It hurts you hugely in where your credit score actually falls. So again, it's just like that 30-day late payment. It can truly ruin your credit score by having a medical collection.
But when you say can't hold it against them, what does that mean? Like you you know what I'm saying? If it still drops their credit, you're kind of holding it against them in a
Right.
way.
I mean, we don't have to count it as a monthly debt.
Okay.
So typical collections, we have to count a monthly payment for that collection.
Hmm.
Or it can, if it's over a certain amount, it can actually disqualify them for a loan completely.
Ah.
Medical collections, we don't have to view that way. However, it does hurt your credit score. So as far as loan qualifying, we don't hold it against you. As far as the collection amount or having to use a monthly payment for it in your debt to income ratios. But obviously, your credit score is what your credit score is. We can't adjust that.
I was actually
Ah.
told one time that like you're supposed to do is like let's say you have a balance, let's say you use it for groceries or something like that, to leave like $20 every month over over. Is that like a thing, or did they just someone just tell me that? Does
So it
not pay
just
it fully
depends.
off.
Yeah, so it just depends on how you use your credit card. A lot of people think that they can charge a balance on their card, and as long as they pay it off every month when they receive the invoice, that they are showing a zero balance to the credit bureaus. But that's not actually true. credit card companies actually report to the credit bureau before they send you your monthly invoice. So by the time you get the bill in the mail, they have already reported that credit card balance to the bureau. So let's just say if you had a credit card that had $1,000 limit, and every month you charged $900 on the card, but you paid it off at the end of the month every month. Well, that's great, except the credit for what the credit bureau sees is that you have a revolving $900 balance on your credit card every month, which to them appears that you've already almost maxed out your credit card and you have no available credit. They don't see that you've paid it off because they only see one snapshot of where that credit card balance is throughout the month. And if they see it at $900, then they think your card's maxed out. So if you're going to do something like that, I would suggest paying off the credit card as soon as you use it. So if you want to pay it off each month, that's fine, but pay it off, pay it off weekly rather than waiting to the end of the month to do so. And yes, leaving a small balance on the card can help because if you pay it off completely down to zero every month or every week, and it never actually reports any balance to the credit bureau, then to the credit card or to the credit bureaus, it appears that you're not using it at all, which is not a good thing either. So you want it to be reporting a $10, $20 balance at minimum every month and show that you maintain that or pay it off because that's what helps build your credit score.
Okay,
So
so it
you
makes sense.
shouldn't leave a whole bunch of because I'll meet people that have, well, I closed that account. I mean, I don't use that account, but they'll have a whole bunch of store cards or a whole bunch of gas cards, credit cards, but they don't use no balances. So they should close those.
No, you don't want to close any accounts that have been open for a while, even if they're department store cards that we've talked about. If you've already got them, then and they have zero balances, let them sit there. Don't
Okay.
close them because at least that does show some credit history for you. If you've had that account open for 5 years but you don't use it, that's available credit, regardless of the fact that it's not necessarily ideal, but it is still available credit that you don't utilize, which credit bureaus do like. So I would
Okay.
suggest not closing any open accounts, just pay them off and don't use them, but don't close them.
So we talked about credit scores. I guess the next thing is like debt to income ratio. I've had in the past like a certain deal fell